All right. Good morning, traders, and welcome to this live weekly strategy webinar. I'm Michael Boutros. Great to see you guys this morning. Roddick says, good morning from West Texas. Good to see you, Roddick. Generoso, Apollo, Theodore. We got Agnes in the house. Good morning to everyone in the room. So it is CB week, essentially, right? We got the Fed on tap this week. We got the ECB. We got the BOE. And markets have been in a bit of a lull. Guys, a lot of the setups we'll go over today have actually not given us too much over the last week. But this is, I agree with you, Febby, good to see you in the room, the last big event of the year. We also have inflation data on tap tomorrow before we get the FOMC. So we'll cover all the implications of what that means, the setups that we're looking at. On the menu, we'll obviously start with DXY, Euro, Dollar CAD, Aussie Dollar, Gold, oil, and then we'll take a look at the indices, the SPX, NDX, and the Dow Jones. Quick apology, my voice is a little hoarse here, still feeling a little under the weather, so I'm gonna work through it, but good to see you guys, and as always, any other questions or trade setups, feel free to throw them on the message board. A quick reminder, obviously after 12 years, no longer with Daily FX, guys, for now, all of the trade setups and things that we cover in this webinar will be on my Twitter handle. It's the best place to find it, at MB4X. And like I said in last week's session, within the next couple of weeks here, I'll have an announcement for where you can find all the latest research and charts. All right, let's jump right in. So what are we looking for with the FOMC? Ted says, thank you for carrying on. Cheers, mate. My pleasure. My pleasure. So here's what we're looking at with the FOMC. A quick reminder to everyone in the room. I don't want to get too deep into the the fundies or the politics of it all, but what do we know and what do we not know? What's the variable we're looking for tomorrow? Well, first thing on its face, what do we know? The Fed has been notoriously wrong with its projections, like terribly wrong, right? Markets right now are pricing in somewhere of a high watermark for rates, somewhere above 5.2, okay? They're still looking sub 5. So there's a disconnect there where the markets are expecting higher rates than the Fed has projected. Not only that, but we'll also, what happens with inflation? What do we know? Well, again, on inflation, they've been horribly wrong. Their projections for inflation, I just wanted to bring this up. This is the last read, guys. Remember, this month, we're not just getting the interest rate decision, but we're getting the updated economic projections, the quarterly projections as they pertain to employment, inflation, and growth, right? This was their last change. And I do this every interest rate announcement, at least I try to. Within minutes of the announcement coming out, I try to give you a side-by-side comparison. And just to show you, for the last two projections, guys, what have they been doing? They've been, this is from June, decreasing their growth projections, increasing their unemployment projections, and increasing the inflation projections. That was in June. Back in September, what'd they do? Stop traffic, reduced growth projections, increased unemployment projections, and increased inflation projections. All not, suboptimal projections here. So they've been slowing the pace, reducing expectations of growth, increasing expectations of inflation, and obviously unemployment. Well, they've already said that that's one of the things that needs to kind of slow down for the inflation picture to kind of come off. So that leads us to the all famous and all too popular dot plot. And everyone looks at this. Here's a side-by-side comparison of where they were in June and then what they moved to in September, right? You saw all the 2022 projections essentially move higher. For 2023, which is essentially what everyone's looking at now, you also saw most of the Fed members move above 4%, right? 6, 6, and 6, even distribution, but all sub 5%. So we're looking for a change in what the 2023 projections are looking for. Obviously, the inflation read tomorrow is going to be huge, okay? Core inflation is expected to come in at 6.1, a softening from 6.3, and headlines expected to decrease from 7.7 to 7.3. Now, my personal expectations, and again, this is just my humble opinion, is looking out into 2023, we're probably going to see inflation remain rather sticky, right? Whether it comes down to 5% or kind of hovers around 4, I think that's the unknown, what we don't know, that I think the Fed is miscalculating. The other thing that looks a little off is that a lot of people are expecting heading into 2023 that we're actually going to start to see the Fed move off into the third or fourth quarter or move lower on rates. That's not something that they're kind of factoring in here. So the devil's in the details. Obviously, the release comes out. We get these projections right off the bat, but then we get the subsequent presser with Jerome Powell, where he'll read that same statement. But then the question and answer period is where we get some of the real gyrations in price. So stay tuned. 2:30 is when he starts talking. That's, again, when we start to see a little bit more of the volatility. So where does price leave us as we head into this rate decision? One more thing I'm going to cover, guys. Here's the link. I'm going to put the link for you. This is where you can find the Fed announcement. It's in the chat box. The Fed projections tomorrow. So at 2:30 on that link I sent through, click on it, scroll down to December, and you'll see that pop up, the economic projections. So what we'll be looking for tomorrow is, do they continue to reduce growth prospects? What do they do with the inflation outlook, which continues to move up over the last 2 quarters? And that should really drive price action. So with that said, where are we on price? Well, here's what the DXY looks like. There's been no change, guys. I've updated on Twitter. I gave you guys the update on all 4. I think there's a chart in there by accident. It's the weekly. Here we are. Side-by-side comparison. So nothing's really changed. We were looking for an assertive move on the 105 handle, right? You had the 1999 high, you had a 38.2 retracement. We broke below it 2 weeks ago. Last week, we rallied through, but failed and closed back below. So if we look at this on a line chart, right? It basically broke below. We tested it as resistance last week. So that's still sort of the line in the sand, is the 105 handle. I'm very cautiously, I'm neutral here, to be honest with you, on the DXY. And that's just because of where Euro is as well. We'll look at that in a moment. All things held constant, pistol to my head, Boutros, I'll blow your brains out. What's your bias? I'd say below 105, the risk is still for the washout lower. You got that 52-week moving average near 103.70. And then the 2016 high close, which was the 2020 high, decent pivot action on both sides of this year. That converges on basic slope support near 103. All right, what does it look like on the daily chart? Not much has changed here either. Here's the daily chart now, and here's what it looked like last week. Still bobbling along the lower parallels here for the downslope. So again, that 103.80 level, really nice. The 2017 swing high, just above, instead of the close high. Comes in here 103.82, but there's that 103 level, still pretty big. So you can imagine a scenario here where, if the 105 handle holds, you can see a test of that 103.80 level, if not lower. But at the end of the day, last week's opening range, objective opening range, never broke, right? Here's the intraday chart. Here's the 4-hour that we've been following. Here's last week's open. Right? You rallied right off the lower parallel, came back, never broke. So you have initial resistance at 105.69. What's 105.69, you ask? Well, it's last week's high, but it's also the objective December open. Not Mike Boutros' opinion, fact, right? So you have a really clean monthly opening range and weekly opening range right above slope support. We need a break here. Amen says, good morning. Hope you and your family are well. Thanks, man. Good to see you. Ted says, can we see the full screenshot on all time frame sheet? Sure. So again, quick recap. Here's the daily. These are just a series of slopes, all derived off the yearly low or the February low rather. Here's the intraday. Same slopes in red. Here are the blue slopes off the highs from last month. Excuse me, this is the September high. So 1, 2, And again, 3, 4. And on the daily chart, Ted, nothing's different. That's the same slope we've been looking at for for a few years now. Any questions on DXY? We are testing downtrend support heading into inflation data tomorrow and the FOMC on Wednesday. Sit tight, buckle up, and stay nimble here. Hi, man. Love your webinars. Thank you, Roberto. Can you do a quick look at Euro Swiss? Ooh, really, Roberto? I mean, for you, I'll do it, but Euro Swiss, we'll take a look. Why is the DXY bearish while the FOMC is too hawkish? Apollo. So Apollo, I missed your question earlier. Great to see you in the room, first of all, from Nairobi, Kenya. I do know where that is. Great to see you. He says, this week's calendar is loaded with lots of fundamental news. For the US, we have CPI tomorrow and the FOMC on Wednesday. What news as a trader would be most concerned? I expect the FOMC to be the heaviest hitter and direct DXY price projection. I may be wrong. So Apollo, you're right that the FOMC is probably gonna be the biggest hitter, but tomorrow's, let me take a step back. Tomorrow's inflation data, guys, has large implications because of its impact on the Fed. So either way, it all links back to the Fed, right? So if inflation is running super hot tomorrow, we get a 6.3 print or a 6.4 print, right? Instead of the 6.1 that we're expecting to drop off to, that gives more latitude to the FOMC to be more hawkish, to be more aggressive. Remember, we're expecting 50 basis points. We already got 4 75 basis point hikes. Guys, that is unprecedented. That is aggressive, right? So it's going to be interesting to see, you know, whether they come in line with the projections or not. If inflation runs hot, you're going to see those expectations for a possible 75 basis point hike again start to rise. That may help the dollar. With regards to your question to the dollar, Apollo, it's been on a tear, my man, right? This thing has ripped, and that rally in September was largely driven by expectations of higher rates, right? But now you're seeing that the market is starting to get a little wobbly, right? We haven't even seen the full impact of higher rates on the market, on real prices yet, right? There's a 6-month lag on that kind of policy. So you're going to get a breather. You're going to get a blow off, right? We can't always correlate, guys, the immediate move you're seeing in price to a fundamental opinion. That kind of mentality is only going to be problematic for you. Just telling you from experience, right? The larger fundamental theme can remain intact while price is correct. It doesn't mean that we're changing our opinion. But on the rally that we had in September, on the break of yearly uptrend support we got in November, we're just seeing that corrective pullback. Does that make sense, Apollo? Look, the larger, and this is the weekly chart, right? The larger opinion, I don't think anyone's going to fight or say that this chart is not in a bullish trend, but we responded to uptrend resistance. Uptrend support broke, and so now we're looking for the next uptrend support, right? And that's where we start to reassess and look for positioning for the larger move. He says, yes, very clear, right on. Good questions. Good questions, Apollo. Always good to see you in the room, sir. All right. So that is the DXY, a recap heading into event risk. Ted, your question on the 10-year. Here's what the 10-year looks like on the 10-year, on the weekly, excuse me. And I'll show you the daily chart. It's actually pretty impressive. So ever since that outside weekly reversal we got in November, it's been pretty straight shot, right, down. Last week was the first up week we had in 4. Didn't get much rise there. So you're basically testing the highs that you made back here in that rally back in June, right? So maybe a little upside, but at the end of the day, we kind of buckled back below that slope. So I'm thinking you get a larger move. Here's what the 10-year looks like on the daily chart. Okay, I was working on this yesterday. So this pitchfork off the highs, objective, high, low, high, 1, 2, 3, right? Not so tidy on the median line, but you can see really nice breaks right, of the 75% parallel. Here's 25% parallel. Could be in play. The monthly open comes in at 3.6, Ted. That's initial resistance. You can see that we've tested that multiple days last week, and it's now resistance. It's the objective monthly open, followed by the median line, which comes in line with that low you made back in November. So you're looking at like 3.67. So yeah, maybe a little bit of a pop higher if you do get a rally, all within the confines of the descent, I think. Support 342, that's where we caught support. It's the 50 of the rally off August. Key support is down here. 321, 325, you got the 2018 swing high. You got a basic 618 from the rally from August. You got downtrend support. All right, but just as a lot of the pairs that we're gonna go over today, all of these guys have set up beautiful monthly opening ranges. Again, a quick recap, when we're talking about monthly opening ranges or weekly opening ranges, don't stress the time, stress price. So here's the monthly open, you set a high, you set a low, you try to test a high, this is your monthly opening range. It's the 12th of the month, we're looking for a break of this range for the next decisive move. And I'm gonna show you the same type of phenomena, guys, across a lot of different pairs today, okay? Are you a bull or a bear based on the charts? So right here, I'm looking for a breach of the monthly opening range or breakout of the monthly opening range, Ted. I still think we're in this downtrend, but I'm looking for a low. I'm looking for a possible low. So whether we break the median line from here and start to move higher and that confirms the low here, or whether we break the monthly opening range and then strike a new low before we start to rally again, that's kind of my mentality from where we are now. At the end of the day, we're testing downtrend support. Could get a pop, but I'd be looking for resistance at downtrend resistance in that scenario. Make sense, Ted? Here's what it looks like on the 4-hour chart. Looks a little cleaner here, right? And a basic retracement for the move we just made. There's the 38.2, max. Like here are your first two levels of resistance, max 37. Like I wouldn't even want to see a break of the median line, to be honest with you, if we are heading lower. But I'm basically looking to confirm a low. All right, hope that answers that question. And again, this will have implications on what we see in the dollar index, which is very similar, right? DXY, we've been talking about that, testing downtrend support, very, very similar scenario. Look at dollar yen, not a pair I'm actually involved in, but very similar scenario here. We rebounded off of downtrend support. 138.60 is sort of the line in the sand. If you get through that, you're looking for the breakout. Below that, we're still in the downtrend. Remember, guys, trading is an if-then proposition. You are bearish unless while below, right? You're bullish while above this level. This is the breakout zone. So very clean monthly opening range, just below resistance in dollar yen. Here's dollar yen, by the way, on the daily. All right. So that's the 10-year and dollar yen real quick. Any questions on either of those? 1, 2, and 3. All right, euro. Here's what the euro looks like on all the time frames, and here was our last update on euro dollar. Okay, so the monthly opening range just below resistance at 106.10/32. That's exactly the same setup we're at right now. Here's what the weekly chart looked like last week. We highlighted this key region. You got the 52-week moving average at 105.70. You got the 38.2 of the drop from last year's high. That's 106.10. And then you got the 2020 swing low, and that's 106.37. So you're basically looking at like a 50 pip range of like massive technical resistance here. Similar scenario, right? DXY at support, monthly opening range taking shape. You got to look for this break. You got to look for this break. Taking a look sideways here at the daily chart. Here's the daily chart look like as we were approaching that region. Hasn't really changed much. Here's what the daily chart looks like on the euro now. Same level, 38.2. A 1618 stretches into 106.30. So uptrend resistance right? All of these lines are parallels of the original slope off the yearly low. And again, the monthly opening range is set right here. 104, excuse me, into 106.10 is the break you're looking for. 106.30 ideally, but you're butting it into uptrend resistance. DXY testing downtrend support. Some nice symmetry. The levels look clean. We just need the momentum to give us the break. Yeah, sure, Ted. Here's the full screen chart. And here's the euro on the full screen chart here too. Okay, so this is just using slope off the 2008 highs. I showed you guys this last week. Quick reminder to anyone who's new to the room, there's a picture or a camera button on the top of your GoToWebinar screen for if you need to take a snapshot of any of the charts we're working on here today for later in the week. Feel free to do that. Ted says looking for reaction, not a break of it. Which level were you talking about, Ted? That 106 region? It's a big pivot. If the Fed, he says yes, so it's a big pivot. Look, if Fed expectations pull back interest rates at all, you might see the dollar start to pull off a little bit. Yeah, that could fuel a bit of a breach. But as it stands right now, all things held constant, I think you may be right on one instance, guys. Again, the market's projections of where the Fed rates will be terminus, or the high water mark is higher from where the Fed is. So if the Fed adjusts to match those expectations, that in and of itself might not give you the dollar rally. If they're more aggressive on the interest rate forecast, that might fuel it. But all things held constant, if they do just match where the market's at, yeah, at that point you could see the dollar come off even more, and that could fuel or propagate a breach. We'll have to see. We'll have to see what kind of reaction we get here. At the end of the day, for me, it's all about the weekly and the monthly opening ranges. Really tighty, just below resistance. Now, on the daily chart, guys, you don't see this pitchfork on the weekly. I'm working with a slightly different slope there, so I have both of them on there, but this is a pitchfork off the 2018 high and this year's late May high, or last year's late May high, rather. You can see the median line, beautiful price action there. Beautiful reaction at the lower parallel. Again, we're testing downtrend resistance right here, right now. On building divergence, nonetheless. So what we're making right now would be a third divergent point. Again, remember, when we're looking at divergence, all that matters is the low. Take the last three reference points, higher high, higher high, higher high, lower high, lower high. Not even this week's candle, because this doesn't matter, right? Last week's close. So there is divergence. Remember, divergence doesn't mean anything with respect to time, right? Things can stay in divergence for a week, a month, a year. But when you have divergence into a massively important critical technical zone, that's when it becomes more important. On both the breakout, you'd expect the breakout to be much more accelerated if it happens. And on the rejection, if this ends up breaking the monthly opening range, the monthly open to the downside, expect a larger move. All right, so some perspective there on the euro price action. Here's what euro looks like on an intraday chart, and here's what it looked like last week. So no change to any of those levels either. Same pitchfork is in play. On the immediate front, 610 into 106.30 is kind of the zone that we would need to see a breakout. In that scenario, you'd be looking for those slopes. Right now it's near 107.50 or so, but really the next major resistance zone takes into 109.40. So again, if we breach higher, there's room, in my humble opinion, not a trade recommendation, just my humble opinion. And a break below 104 is what you'd need to really solidify sort of the pullback, the resumption of the downtrend in euro. So battle lines are drawn, the levels are well mapped out. Again, we just need that kick in momentum, and we're certainly getting a whole lot of event risk this week. That'll be the catalyst, starting tomorrow with the CPI numbers in the US, FOMC on Wednesday, then heading into Thursday, you get the ECB interest rate decision on as well. So you get hit from both sides of this right into Thursday. Stay nimble. All right, that's number 4. Any questions on Euro? All right, next up, number 5, here is dollar CAD. So Loonie was kind of a boring one last week as well, as most of these were. You did see a really nice stretch and a larger range, but we held right at resistance. 36.90 is the level that we talked about in the webinar. It's the 618 of the drop. It's kind of what we're still sitting at resistance there as well. The weekly chart has more to be desired. As I told you last week, we're sitting mid-range of that drop from, October. Looking for some decisive price action. Let me just show you the near-term charts. And here's our last update on dollar CAD. Last week, again, there's resistance still holding, right? Here's the daily chart from last week. There's that 618 still holding. Let me get you the 618 here. So no change to any of those levels. We've just been gyrating. And if you notice, the pullbacks were holding median line support. Rallies failing at the 618. So look, here, the monthly opening range is pretty big. So you're not going to necessarily be looking for a breakout per se of the monthly opening range for some guidance here when the range is just so massive. So look, a breach from here, the high day close of the year is 37.50. These levels to me are beautiful reaction levels. I work with these all the time. The day that the high was registered, the close of that session matters. And you can see that even though we registered a high at 39.71, that day closed at 37.50. We tried to test it as resistance the following month. We rallied through, but again, failed to close before plummeting. So even if we break 36.90, 37.50 for me is sort of a line in the sand. We need to close above that to mark resumption of the broader uptrend in dollar CAD. So what does that mean? It means even if we break higher, you need to use caution into that level. You could see a scenario again where we try to push through and close below. We need to close above 37.50 to mark breakout. Near-term support, the May 2019 high day close has been a beautiful pivot. Also very close to the lows that we made back here in October. That sits at 35.15 near-term support. Bullish invalidation, the level that would shift our focus straight back to the downside, is all the way down at 34. Why? That's the 618 of the rally off the low from last month. It's also the objective monthly open, right? Not Mike Boutros' opinion, fact. It's 34.22. So that's your key support and bullish invalidation level. Again, 37.50 is your breakout zone. Drill down even deeper. Here's the 4-hour chart, and here's daily. Yeah, here's what the zoom out looks like. Here's the zoom out for the full screen on the daily chart here, Ted. And again, here's your 4-hour chart. No change to any of those levels from last week. We're still sitting just below resistance at 36.90. Questions on dollar CAD? Ted says, got it. All right, right on. That's number 5. Number 6, Aussie, one of my favored setups. Kind of, again, a little frustrating last week, but patience pays. Haven't really been able to make a breakout of that zone that we were talking about. So the zone was 66.60 into 68.70. Friday almost tested both ends of that zone on the upside and downside. So it gives us further conviction of looking for a breakout of that critical zone. And it's the weekly chart. No change to any of the weekly levels that we highlighted there. Okay, so here's the weekly chart last week. Same zone, 68.70 resistance, 66.60 support, testing downtrend resistance. So this is pretty significant. If we break the downside, we'd still need to break below the median line to mark resumption, but the immediate focus is on a break of that 200 pip zone there. Now, looking at this from the daily chart, we were looking at that key resistance zone extending into that 618 extension off the low rather, excuse me. That was 68.40. It's exactly what caught the high last week. right? No change to any of those levels. So monthly opening range is set, decent range, 200 pip range that you're looking for a breakout of. And Aussie, again, kind of still a little quiet. Here's the full screen for you, Ted. No change. This is basic trend line resistance off the 2021 high. Here's your slope resistance off the yearly high. Range, range, range. Again, I'll note the ongoing momentum divergence, bring it into a close, higher high, higher high, lower high, lower high. Remember, when you're looking for divergence, you're looking for the oscillator to not confirm a high in price, not the other way around. So you're getting that exhaustion into downtrend resistance. Do we get the larger pullback? Perhaps. Here's what it looks like on the intraday chart. Okay, and here's what it looked like last week. So again, we responded to uptrend, near-term uptrend resistance. Here's near-term uptrend support at last week's low. It's exactly where we kind of dropped into. The median line converges there now. Guess what? That's also the monthly range lows. It's also the key pivot we've been looking at. 66.60, 66.70. That's key support in Aussie. Any questions on Aussie dollar? You got employment data on out of Australia on Wednesday as well. Wednesday night here in New York. So right after the FOMC, you get that Aussie employment data later that night, and that's pretty much going to wrap it up for Aussie releases this week. But keep an eye on that. Questions on Aussie? Okay, moving right along. That's the last of the FX pairs that I've kind of been focused on. I will come back to your question, Apollo, on Euro Swiss if we have time at the end. But let me just take a segue here and go over the gold and indices. Oh, so before I do, Apollo, you know, here's sterling. Guys, you know where I stand on British pound. I haven't been a fan of the levels right now. I know that the Bank of England interest rate decision's on tap, so it's worth minding the levels, as it were. But here's what I have. Low conviction, guys, but I'll give it to you as per your request. So I have a little bit higher slope, and the bigger level of resistance I was looking at is right here, okay? 124.45 into 124. You know, that's the 618 of the entire drop of this year's range. So just this year's range into account. And it's also the 52-week moving average. Again, you know me, guys. I'm not huge on moving average plays, but price speaks. And it's always going to be taken on a case-by-case basis. And just objectively take my opinion and my emotions out. Looking at this over the years, it has been a very decisive price action pivot along that 52-week moving average, right? So yeah, in this pair, I will pay attention to that. That's 124. 618 comes out 124.50. So key region of resistance, maybe a little higher in sterling before you start to see exhaustion. I'm not interested in chasing it higher. At the same respect, Apollo, I'm not trying to call a high here. So what do? Well, you put it on the alert list, you set some alerts in price, and you wait. Here's the daily chart, right? I was so frustrated with this a couple of weeks ago. I just erased all my analysis on it and started from scratch for a fresh sort of look. And this is what I came up with after just a couple of minutes. You're at the 50% retracement of the entire drop from last year's high, right? And then you're at uptrend resistance. So look for a break of the monthly opening range is pretty tight here. You need to breach above that basic trend line, say 124, to get the next breakout. 127.70, 127.60 would be sort of the first levels of resistance I'd be looking in that scenario. But low conviction. Again, here's what the intraday chart looks like. For what it's worth. All right. So Paulo, I don't know if you came in late. We looked at Euro, near-term price action. Here's the chart. No change to that chart I have in my Twitter handle that I posted last week, okay? Okay, so that's a quick look at sterling for your consideration, guys, ahead of the BOE. It's number 7. Number 8. Oh, he says, I'm sorry, euro pound. So euro pound, someone asked about this last week. It's not on my list. No, I haven't updated this in a while. Yeah, I have no opinion on this Apollo on that pair. Haven't updated it in a while. So one of the parts I always want to, one of the things I always want to kind of, yeah, is there any pairs that you look at besides dollar-based pairs? Lungalo, I hope I'm not saying your name wrong. I do look at Aussie yen. It's a good risk barometer. I do look at Euro yen, which is for me has been, actually the setup has been really, really nice. So someone first brought up my attention to this in the webinars a couple of months ago as we were heading into uptrend resistance. We looked at the 2014 high we closed. That was basically 148. We were looking for a rejection of that region. We got it. It's been a very choppy move since, but you know, not too aggressive on. Let me show you what that looks like on the intraday. Here's the daily chart. Here's the slope we've been working with, right? Exhaustion just ahead of the lower parallel, but big resistance here into 145. The median line comes in just higher, 145.50. So key resistance, that's your breakout zone for Euro yen. But with regards, I'm sorry, to go back to your question, Apollo. So one of the things I look at is strong weak analysis. You'll hear it often called best performance analysis. So when you look at a pair like euro dollar and sterling dollar, and they're both rallying, the cross isn't going to be as clear, right? So I tend not to look at that cross. When you look at something like the yen versus most of its major counterparts, that will be also an independent move, right? So I try not to double up on, you know, euro yen. I guess I'll just take a quick look while we're in the crosses here. Euro Swiss, a pair I absolutely hate, Apollo. Microscopic ranges when you're talking about euro yen, euro Swiss with respect to some of the ranges that we're seeing on the dollar crosses or the yen crosses. It's like trying to squeeze water from a stone. Excuse the biblical references, but this is just not my cup of tea. So I'll leave it at that. Let me just look at it at the larger weekly prospects here. Yeah, look at I mean, again, even look at the weekly momentum. You're sitting flatlining at 50. You know, why bother? You have other pairs that are making exquisite moves, or at least maybe not in the short front, but the larger trends are much stronger. Those are the ones want to be involved in instead of trying to force a trade on a pair that has, you know, not even 100 pip ATR. All right, so I'll leave it at that. Again, when I have a strong opinion, I let you guys know. When I don't, I let you guys know. And this is a pair that I'm just not really keen on. All right, so with that said, let's jump into gold. Where are we on gold? All right. Here's gold. There's absolutely no change to the levels that we talked about last week. Iman says, I'm short gold since 1802. That's probably a decent play from these levels. As you guys know, we talked about this last week. I was looking for a pivot, some sort of play off that 52-week moving average, now 1887. You saw last week, we tried to probe through on a closed basis. It held like a charm. On a slope basis, we were talking about that 2018, 2019 slope, which has been the origin of all of these parallels. We talked about that many times, which have been instrumental in all major shifts here in the DXY. We traded back above it, but here we are back below it. Could be a decent pivot. I don't know. At the end of the day, we failed at resistance last week. Could get a decent pullback, but as I said, long term or medium term, I do think that the low is in for the year. That's not a big call. Obviously, we've only got a couple weeks left, but this is the pitchfork we've been working off on the daily chart. We came off of uptrend resistance, held at the objective monthly open, the objective monthly opening range lows. And then last week we failed again right at the highs. So puts the onus on a breakout of 1807, 1768. That's your objective monthly opening range. That's the objective monthly open. That's the range breakout I'm looking at for the next decisive move in gold. Now, now we're constructive above the median line, which is right here, converges on that slope somewhere around 1750. Bullish invalidation, the level that would shift the focus back to the downside, has to be unchanged at 1730. Okay, it's the August swing lows, the August low day close, last year's low day close, right? And then you have a basic 38.2 of the rally off the yearly low. So that's sort of the line in the sand. Anything below 1730 would be, in my humble opinion, bearish gold. As it stands right now, I'm looking for support at 1768, constructive above the median line, need a close above 1807 to get the next move higher in gold. You can tell my voice is slowly fading as we go through the webinar, guys, but I'm going to continue. So bear with me. Is gold been affected by the rumor that Russia is demanding payment made partly by gold? Apollo, my humble opinion, I don't think that's filtering in necessarily to the picture. I think, look, the fundy guys will argue that higher rates is going to be a drag on gold, and that's true. Gold has a holding cost where you're not getting a yield where the dollar is paying you interest now at this point, right? And as rates move higher, that tends to work against gold. True, but you're also starting to see market sentiment start to wane. The survey numbers have been all right here and a little bit heavy there, right? PMI data last week was kind of concerning about inflation, but largely speaking, if the market sentiment turns, and I'll show you the SPX next, guys, that's at a pivotal moment. But if you start to see the market start to turn over a little heavy, yeah, I think gold starts to catch a bid. And if inflation expectations become embedded, again, not to influence anyone, my humble opinion is they are becoming more entrenched. And I think, like I said, like I've been saying, guys, I think just economics 101 was my major. Prices tend to remain pretty sticky. So I don't think we're going to necessarily be able to push inflation as low as quickly as the Fed expects. And again, that may put a tailwind for gold as well. So whatever fundy aspect you point to, from a technical standpoint, we've come off uptrend resistance. I'm looking for a test of uptrend support or a breakout of uptrend resistance to mark the next leg higher. You're looking for 1842, you're looking for 1877. All right, here's what the near-term chart looks like on gold. No change to any of those levels from last week as well. Questions on gold? Thank you, Michael, for covering things up. You didn't leave us. I got you. No worries. Hey, Martin, great to see you as well, sir. All right, so that is gold. Ted wants to take a look at silver. Ted, I haven't been updating the silver chart, to be honest with you, but let's take a quick look. The daily chart has us breaking out of that pitchfork that we were following from this year's high, right? Here's the November highs from last year, the highs from March of this year, late last month into the open, of December. It looks like we broke out, tested as support, and came off. Again, a situation here where you are getting some divergence, on the daily chart. You are testing upslope support. This is just a parallel, a basic trend support. So another scenario where, yeah, you could see a little bit of an exhaustion here. This is the 618 of the yearly range. So if we buckle back below it, sure, maybe a pullback. I'd stay constructive above 2160, 2190, this zone right here. A breach of the upslope, you're looking for like 2540. But as it stands right now, a similar scenario, Ted, to what we're looking at in gold, in that I think you could see some upside exhaustion, but ultimately I do think the thing stays supported. Make sense? All right, so that's gold and a quick look at silver. Here's the weekly chart, by the way, on silver. Yeah, it looks like a scenario. We get a little bit of exhaustion, but you wouldn't want to see losses below like 2260. Okay, oil. So my man Apollo had a question about this earlier. And he was asking, what happened to WTI and Brent? Has the price collapsed on account of demand dying, or EU sanctions, or the Chinese zero COVID restrictions has become risky for small traders like myself to touch oil? Look, I feel like a broken record. When we come into these sessions for the last couple of weeks, I feel like gold has been sitting, or excuse me, oil has been sitting at support. We've now broken that support, but now I have us at support again. Here's what I'm looking at. No change to any of the levels that we've been following. Oh, by the way, guys, so the SPX levels haven't changed either. Here's the last tweet and a chain that I walked through on the SPX levels. You can go through those at your leisure, guys, but they have the whole walkthrough of us approaching resistance at 4100, right? Us hitting resistance at 4100. And then us responding to resistance at 4100. So really clean on those levels. We'll go over those in a moment. But for oil, here was the level, guys: 76.87, 75.35. That was the objective yearly open, the 2018 swing high, right? We struck that level back here in September, rallied off it. We sat there for 2 weeks. Last week, we broke below it and ran right into what? The lower parallel. Now, I don't want to say we're necessarily at support, but we're testing a downtrend support. So I know you don't like this, but we're testing the 618 and 88.6. Jay, I love the 86. I don't know why you don't like that. I always love when you drop some knowledge on us, Jay. Tell me the reference points off those. I'll show you my levels in a moment, but something to keep in mind, okay, is that slope. If we buckle back above 76.87, maybe there's hope for a low. But at this point, we're testing a break of uptrend support, a test of downtrend support. So what does that mean for us? Here's oil on the daily charts. All right. Same slope, parallel here, 1 touch, 2 touch, sitting right there right now. On a closed basis, man, we're there. So at the end of the day, we're testing downtrend support. If oil breaks, look for that drop towards 66.50, 66.60 is pretty quick, right? But something we should be paying attention to, in my humble opinion. Again, here's the near-term picture. This is just basic June trendline resistance, breakout, support, a little bit of a pivot there, but support, 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 support again? I don't know. Eventually, again, I don't want to sound like a broken record. I do think oil catches a bid. I do think we get, another resumption of the larger, broader uptrend. But below 75, the risk is lower. You know what I mean? Even if we rally from into this zone, I'd be looking for a pivot there. 66.50, 66.60 being the next major zone of support. Questions on oil? Very precarious here. We're testing fresh yearly lows. Again, slope would suggest watch out. But I'm not a big fan of chasing this to the downside, no. Not from these levels. So cautiously bearish, or cautiously bullish rather, within the confines of the bearish trend. But I'm neutral. If you had to put a pistol in my head, I'm neutral here. Looking at, okay, any other questions on oil? Yeah, I see all your questions on the SPX. It's super exciting. So yeah, I got a little bit overexcited and I showed you those charts, but here's what I'm looking at. Again, guys, beautiful reaction, wonderfully clear technical levels. the SPX has been astounding. And if you ever have your doubts on technical analysis, I was telling you, seeing is believing. And here's the update. Again, we've been walking through this step by step ever since the initial drive into 4,100, downtrend resistance. Again, we highlighted that chart back in November, on November 23rd. And then we just continue to follow through, right? Again, on December 1st, we were highlighting this is a big zone of resistance, huge level for the SPX, massively important. And then after it reacted, hey, this is the first reaction we've gotten. Watch support at 39.06. That's what held last week. So the focus remains on 39.06 support, 41.05 resistance. We're looking for a breakout of this zone. Keeping in mind, again, the 52-week moving average is just a little higher in your 41.20s, but that's the zone we're looking for a breakout. Now, all things held constant, you tested yearly downtrend resistance. So the onus, or I guess the expectation would be for a pivot back below 39.06 for the resumptive move lower. How do we find that break? That's where the near-term charts come in. Daily chart. Looks like we've broken basic uptrend support. Okay, a break of support oftentimes get tested as resistance. Guess what? Key resistance, 40.26, 40.30, the 618 of the drop, the 52-week moving average, former slope support turned resistance. That's your bearish inval. So you're bearish below 40.30. The break you need to mark resumption, objective levels. And let's not put opinion into it. The objective monthly open from last month, a 38.2 of the rally, 38.69, 38.70. That's the break you need to mark resumption of the downtrend, targeting 37.25 and 36.60. So for the SPX, again, the levels could not be clearer in my humble opinion. 40.30 is your bearish inval key resistance. Initial support right at 39.06, right? 39.10 is that, or 39.13 is the high from the October opening range. So a little closer, 38.69, excuse me, is going to be the level that marks resumption of the downtrend. Questions on the SPX? Here's what it looks like even closer. No change to any of the levels on the intraday charts either. Just to give you an update, again, the daily chart, no change on that, right? We ran right into this region, failed and pulled back. Intraday, here's the same slope we were following last week. Again, 39.13 converges on the median line. There's 38.69. Questions on the SPX? So we could, if we break this trend line, that's why I have that here. Yeah, so guys, in case it wasn't obvious, this is your really short-term slopes, right? So you keep these on the intraday to keep in mind what would shift my opinion. There's been a 3-point touch of this slope. So if we break above 39.85, yeah, then you're starting to look for that possible scenario for a test of 40.30, right? But price needs to exhaust. Any rallies need to fail ahead of that zone if we are moving lower in risk. Make sense? Amazing technical analysis on SPX Forex principles. Thank you, sir. Appreciate that. Again, they're not my levels, guys, the market's levels. I'm just helping you find them. All right. That's the S&P 500. Dow Jones coming right up to Jay. Here's the Nasdaq, okay? Let me show you Nasdaq on the weekly charts first. All of the weekly charts have continued to play out pretty well. This one failed just ahead of resistance. As you guys recall, for the last couple of weeks, on this rally, we were looking for a test of the lows from 2021. And that was like 12,208. Now, you still could get them, but certainly failure, exhaustion, gap lower leaves a little more to be desired. We filled the gap. So if we break that gap fill to the upside, yeah, maybe you get the exhaustion and still into 12,208. But at the end of the day, that's where it converges on yearly downtrend resistance. Here's what it looks like on the daily chart. All right, we've been working with this pitchfork off the lows. Even the upper parallel was just higher, right? Didn't quite make it before the failure lower. So look, a basic 38.2 has been holding up support for the last few weeks. If we break below that, Slope comes in near 11,330, but the big support zone is basically into 11,000. Okay, you got the low day close for the year, for this year. You got the 618 of the rally. You got the June low from this year as well. All of them converge on that lower parallel in this zone. Okay, so here's what it looks like. I'm sorry, that's the 4 hour. Here's what it looks like on the daily chart. Same slope, no change. Questions? Are the QQQ the same as this? They should be more or less, Ted. The closes and the opens might be a little different, but it should be pretty similar. Pretty similar, yeah. All right, last but not least, here's a quick look at the Dow Jones. And very similar scenario. So this one was the one that actually broke out, right? Here's the weekly chart. We broke out of the yearly downtrend. We even rallied through this massively important pivot, closed a week, 2 weeks above, and here's an attempt to move back down. This is something to pay attention to. You oftentimes, if those of you who've been for the last couple of years, hear me talk about something called the non-confirmation high. So when you have related assets and one of them makes a new high, whether it's a new yearly high, a break of the yearly downtrend, a break of multi-month highs, which you got here, and the other one does not, a lot of times those are indicative or tend to happen oftentimes at market turns or market highs or lows. So here you can see a scenario where, again, SPX didn't break that high from August, nowhere near it. Didn't even break the highs from September, nowhere near it. Nasdaq, same thing, nowhere near it. Breakout, non-confirmation high here. So if we pull back below 32,806, which was the uptrend, which is going to necessitate a break back below the 52-week moving average, which would necessitate a break back below those former close lows from back in March. In my opinion, that would put you in a false break scenario and put the downtrend back into play. But this is going to be the one I'll be paying attention to give me that conviction, both for the SPX and the NDX. All right, you're seeing a pretty heavy drop right early into the week. Let's see what this looks like as we get deeper into the session. Right, here's your daily chart breaking below the median line for this uptrend that we've been following. Monthly open converges on a 38.2. That's 32,800. Look for support there. Intraday, the slope confluence comes down a little bit lower, but that's going to be the first pivot I'm looking for. You can see clear pivots in price along that level. And the monthly open is right there as well from last month. Okay. One other thing I would consider here. That's the low. 38.2. So just ahead of that. 32,350. Depending on where you are in time, that might converge with a nice slope move too. All right, so that's the amended chart there on the Dow. Will it be possible to get this recording, Apollo? Yes, I will have it posted on my YouTube channel. I hope to have it out to you later today. So keep your eye on my Twitter handle for that. All right, that's everything from my list, and I think I got all your questions, guys. I hit Euro, Swiss, and Sterling, and even Euro Pound for Apollo, which was a weird one. Nat Gas is the other one I see a lot of questions as. Look, I don't have any fresh analysis on this, guys. Yeah, this is pretty stale. Here's the pitchfork we were following a few months ago. We gapped right into it. That's actually pretty interesting, and we moved lower. Here's their monthly open at 693 resistance. Even if you were to get just a fill of the gap, we'll clean this up a little bit. You need to move in 625. Okay. Okay. Forget the October high. I would look at the October high day close. Okay. It stretches a region of resistance here, guys, from 693, which is this month's objective monthly open, into 715. I know that's not a, it's a big range of resistance, but you have the 200-day moving average, the 618 at the drop, and the October highs all lining up with the monthly open. This is pretty big resistance, all right? So I would want to see it close above 715 to validate breakout. Near-term support, if you were to get a pullback, just to fill the gap, would be 625. Forget this slope. All right. Hope that offers some help there, some guidance on this. And also, let me just see what this looks like. Ah, and the median line converges right on that moving average. Brilliant. Possible slope. Way too early to rely on this, right? But possible. Puts the onus again on a breakout above 715 to give you the conviction that we're moving higher here. Otherwise, be careful. You're heading into resistance. All right. Last but not least, I missed this last week, so I'm going to take you a quick, real humble opinion on what's going on in Bitcoin. I see your question there. Yeah. So look, it's been an exceptionally tight range. My humble opinion is that we do still see another test of the lows, but look, the zones have been holding ridiculously well ever since October. So September was a little messy. We highlighted this critical zone here, 2017 high, 2020 low day close. We closed below it. We bobbled there for a bit. All of October's range was essentially testing that key zone. You can see when we broke that zone last month, that was the first level you finally got an accelerated drop. We're back testing a zone like that only as resistance. It extends from 17,000, essentially 16,995, into 17,150. And you can see ever since that sail through on November 9th, that has been resistance. So look, again, real short-term stuff. Sure. Asymmetric triangle into that resistance. If that breaks the downside, sure, you get the resumptive move, back towards the median line, which is kind of my base case scenario. But at the end of the day, if we close above 17,150, that's your mark, in my humble opinion, for essentially the potential for a larger rally back towards 20,000, back towards 19.6. But all things held constant, I still think the risk is for another drag at or another test of a new low. All right. I'm way over on time, even though we're not really restricted to time here anymore, but it's always great to start off the week with you guys. Stay nimble. Look, we're in the holiday season. You're going to get reduced volume the closer and closer we get towards the Christmas and New Year's holiday. So take that into account, right? Liquidity thinning does tend to make volatility greater. And we have a lot of event risk on tap, starting tomorrow with the inflation read at 8:30. And then we get heading into Wednesday, the core inflation data out of the UK. We get the FOMC interest rate decision, Australian employment, then into Thursday, ECB, BOE. And in case that it wasn't enough, you get retail sales out of the US as well. So it is an event-packed risk-packed week. Stay nimble. I'm not saying don't trade. There's a lot of opportunity, but stay nimble with your positioning. Be a little bit more meticulous with your risk management, and best of luck trading. Do we have a webinar next week, Apollo? I am planning on doing one on Monday, guys. If the market completely thins out, I might cancel it, but all things held constant, I will see you here next Monday, and that will probably be the last one for the year, and then we'll pick up in January. Again, keep your eyes on my Twitter handle, guys, for the latest charts. And I'll be releasing an announcement as soon as I have to give it to you for where we'll be housing all our latest analysis. Till then, best of luck trading, guys, and I'll see you all on Monday. Have a great week. Cheers.